Hi everybody, Alex here from Expert Forex, and in today's video I'm going to give you 22 examples of how to find better make money day trading settings. Now this skill is absolutely critical if you are planning to become a proprietary trader. You need to know what to do when there is a mess, and it's best that you know what to do before the mess occurs so that it doesn't catch you by surprise. Now as you can see in this illustration, most traders when they run into a mess just run away. But if you prepared, you can just analyze the situation and improve your account balance. So at the moment I'm testing the Make Money Day Trading robot. It was launched about 2 weeks ago. We are now trading it in a proprietary trading course that is available in our paid membership forum. So I'm going through the process that is recommended in this particular course. And in previous videos I showed you how I created set files and how I loaded those set files into two ways of forward testing your set files. The one, I actually used the proprietary trading platform, loaded it into that, and the other one I loaded it into my normal testing process, which is a collection of platforms for testing, and it'll make more sense as we go on. But if you want to see more about that, please you have a look at this particular video on your screen. The links to that video and anything in this video will be in the description of the video as well as in the commentary of the video. Okay, so what we're going to be doing today is we're going to have a look at the visual results that are occurring on my forward testing accounts, and we're going to look at ways of improving the results from using common sense by looking at what's going on those accounts. And these visual observations are a lot stronger than optimized settings. I in fact set this mess up so that we could go through this particular process by using optimized settings. Now optimized settings seriously are not the ones to use in proprietary trading. What I'm going to show you today is what you should be using for proprietary trading. So there are only a handful of adjustments that really are required to improve the results that you get from day trading EAs. And the first one is the time of day could be wrong or could be improved. The second one is your direction is wrong. You're either going with the trend or against the trend. Your lot sizing is wrong. Now this is a very misunderstood setting, but your lot sizing is the most critical setting of proprietary trading. If you get it too big, you're going to be hitting your stops all the time. You're never going to hit your targets and so on. And if it's too small, you'll also be missing your target. So it is a very critical setting, that one. And then the day trading is too big. So if your day trading target is too big, you're not going to reach the target. You could be subject to reversals that take all your profits away. Then the MA settings could be too sensitive or too strict, and again, once we've done 22 of these charts, you'll get a good feel of that. And then your risk return ratio could be inappropriate. In other words, your stops are way too big compared to your targets, or your targets are way too big compared to your stops. So those are the main reasons. I've got number 7 there because we might find some other ones as we go through the chart. But so there are the potential adjustments that we can make from just purely looking at the charts. And these are the settings that impact those adjustments. So the first one is the time of day. Obviously that could be wrong. Then the second one is the trade direction. You could trade in the direction of the trend, or you can trade against the trend. Your position sizing, as I've mentioned before, this is the most important one, and I'm going to show you how you can see if your position sizing is wrong from by looking at the charts. And also then your daily targets for profits and daily loss amounts. That very important. Firstly, the ratio, is it smaller than your target? Are your losses smaller than the targets? and also the amounts. If the amounts are too big or too small, you're going to mess your results up. Then the moving average settings, there they are. Sometimes they can be too sensitive and sometimes they can be too loose. We can adjust those. And then the initial stop loss and take profit, also important settings, because they can either be too big or too small, and the ratio between them can be wrong. You can have huge stops and small targets, or you could have small targets and huge stops, and that will impact the results that you achieve. And all of this can be seen from the visual charts. So in the previous video I showed you a spreadsheet that I had created. In fact, I'll unhide the rows that I'm not using, so there they are. So I'm going to hide the ones that I don't need, and then I'm going to actually review each of the settings. There they are. There are 10 on FTMO and there are 12 on IG. I'm going to be reviewing them one by one and making notes here. Now, one of the things I must stress is that this review should only really take place after 1 week's trading, or maybe even 2 weeks of trading, because then you have sufficient examples. But I am doing this review after 3 days of trading, because I believe there's enough variety in the results that I'm experiencing to show you the process, because this video is actually a training video for proprietary traders in the course, and it is more important for you to get the concept so that you can apply it to your own trading. I know there are a lot of traders that have already started trading their set files, as I have. I'm trading 22 set files there. So let's start with the FTMO set files, and as I go through each chart I will update the spreadsheet. So here we are on the FTMO platform. I've opened an account of $100,000. So far this account is making a loss of about $1,500, so it's not a train smash based on the size of the account. I'm basically trading at $10,000 on each set file, and there are the 10 set files that I have. So the top one on my Excel spreadsheet is the pound CAD. So let's go straight to the pound CAD. Okay, so here's the pound CAD. I'm going to open it up. And one of the things that I like doing is if I am trading with indicators, I like putting the indicators on the chart so that I can see what's going on. I'm also going to just remove the grid, make it easier to read. And so let's have a look at what's happened with this trading over the last 3 days. So I'm going to just reduce the size, move that to the side. And what we can see is it started out with a bang. It had a gain of $300 on the first day. The next day it incurred a loss of 100, and it incurred a loss of 100. So far this one is actually up, but we need to have a look at how we can improve the trading. Now, the moving averages, as you can see, you can almost not see the difference between the two, but if I enhance them, then you can see them. And why the moving averages are important: when they're pointing in the same direction, then a trade is taken. If they're pointing in different directions, a trade isn't taken. So when they're close together like they are here, it's the 8 and the 6 moving average, there is a less likelihood that they will not be pointing in the same direction, and that is what we call sensitivity. So let's have a look at what we can make out from this trading. So firstly, you can see the trend was going up and the EA was entering sells. So that's the setting of the direction setting that says trade against the trend. So we basically got that set as trade against the trend, and in this case it worked quite nice because it opened a whole lot of sells. The trend then reversed, and in time for it to actually reach a profit figure of $300, and it then closed the trades. So there were way more sells than buys, and that's why it reached the profit figure of 300. It's a great start to the trading. That's a start of 3%, and in most cases the proprietary trading firms need a 10% return, so we're almost a third of the way towards our profit target. So this worked quite well. Then what happened is the next day there was a massive trend, and it started trading against the trend, and then it eventually reached a loss situation of $100. So that was a situation where the strategy didn't work. This trend was too strong, and it bombed out. Then the next day, which is very close, let's open it up again. Again, a very strong trend. It started trading against the trend, and in fact the trend did reverse, but then the trend continued and it was stopped out at minus 100. Now the big thing is we are visually looking at this, and we are saying, what I might do is just fold this away. Is we're saying, how could we have improved the results of this trading on the pound CAD? So the first thing that I normally look at is I say, what can I see on the chart that can give me clues that we may have used the wrong time of day? So now here are quite a few trends that are shown on this chart. A lot of trends. See those trends? There's a strong trend. So what I'm going to do is I'm going to look at the time of day that these trends started. So here's one. It's 16:45. That trend started at 10:45. That trend up there started at 17. So I'm writing these times down as I'm going through, and let's have a look at some more ones. There's a nice trend that started, that was at roughly 12 o'clock. Let's have a look at some other days. There was a nice trend that started around about 10 o'clock, and there's a trend that started around about 1300, and there was an upward trend that started around about 1700. Okay, so there's actually, in terms of the time of day, there are two groups of settings here. The one says there were nice trends started around about 1600 and 1700 hours, and then the other group says that there were nice trends that started around about 10 o'clock till 12 o'clock or 1300 hours. The one basically was after the UK market had started, and the other one was well after the US market had started. So the question, I'm from a visual inspection, I'm saying, would a with the trend strategy that started round about 10 o'clock in the morning been more effective? So I'm going to actually write that down in my spreadsheet. I'm going to say with the trend start 10 o'clock or even 1600 hours. Okay, so that's one of the things that comes out of this visual inspection. Remember, this is actually a positive, the result of this trading so far. Again, as I say, I'm only looking at 3 examples, but ideally I would like 5 to 10 examples so I can spot a pattern more frequently. Okay, so we've done the time of day evaluation. We've set the direction. There's a question mark with the trend technique using those start times that I've just said been more effective. So the direction we need to test a little bit more, and at this stage I'm not going to go into the testing, but direction, I think there is a question mark. Should this be with the trend strategy, or is the against the trend strategy a good one? Okay, so now I'm looking at starting to look at lot sizing and targets and those kind of things. So I'm saying, look at that day. There were 2 trades, 1, 2, and they got stopped out at the loss. So there is something wrong there in that only a stop out was done after 2 trades, and here we have a stop out also after 2 trades. The daily loss was reached. So the question now is the lot sizing too high because the stops are being hit too quickly? Are the stops maybe too big, and there should be more open trades? So there's a question about, because ideally when you set this kind of technique up, you want to see at least 4 trades before the daily target is reached, and you need to see 4 trades that are stopped out before the daily target. Now this is only generating 2 trades, so there's a question about the settings aren't generating enough trades to give the price action time to go positive. So what I'm going to do on my spreadsheet is I'm just going to say too few negative trades, and there's a few solutions to that. There's we could look at the lot sizing and the ratio between profits and the ratio between targets and losses. So there we are, and I don't think we need to overanalyze it any further. Ideally, I'd wait for another 2 days of trading to see. The moving averages seem to be okay. They fast, and because they fast, in general, how strategies work, the faster the moving averages, the more the trend with the trend technique should happen. The slower the moving average, the more the reversal techniques happen. So we're using fast ones to trade a reversal strategy. Possibly this is an indication that the strategy, the direction is wrong. So that's another note that I'll make here. MAs are for trend strategies. So there we go. Now our return on risk is good because we making $300 when it's successful. We're losing only 100 when it's unsuccessful. So that ratio is very good. Okay, so that's the one currency. We're going to move on to the other ones. There are 22 to go, so this might be a long video. Now let's have a look at the next one. The next one was the New Zealand yen. So we have a look at that one. New Zealand yen, and we open it up. And this one, again, I've added the moving averages to the chart, and I've removed the grid, and I've folded the information up. So let's have a look at what happened here. Now again, this is a reversal strategy. You can see it is taking sells in a uptrend. There's the uptrend, it took a whole lot of sells there, and there's the downtrend, and it took a lot of buys. So immediately from a visual point of view, we can see this is another reversal strategy, and the question is, does this work? And if we look at the overall results, daily loss, first trade. Second one made a nice profit, but it was stopped out on the time of day, not on hitting the day target, but the time of day of trading ran out, and then here is a loss again. So the overall situation is actually a small loss because it never hit that 300 or bigger target that there is. So again, we have to ask ourselves, does the time of day approach look correct, and could we have improved on it? So just looking here, it looks like the trading started at 1600 hours every day. Yeah, 1600 hours. So the question is, would there be a better time to start? So let's have a look at some of the nice trends. Now there are quite a few very nice trends that have happened here. Let's go and find when they started. So that was 10 o'clock. That particular long trend that went down there, that was 3 o'clock in the morning. That trend over there, definitely one we want to catch. That's 9 o'clock, and this one over here was 4 o'clock, and then that one over there, really good one, that was 9 o'clock roughly. and then maybe that one over there, that was 5 o'clock, and where's another nice one there? Maybe that is a nice one. That's 1700 hours. All right. Okay, so again, what we found by looking at the past charts is that a lot of the trends happen around about 10 o'clock or 9 o'clock. So there's a group of potential times that the trading should move to catch trending trades. There's another group here at 4 o'clock, around about 4 o'clock, 3 o'clock, 4 o'clock, 5 o'clock. Those trends can also be caught then. There's a 4 o'clock trend. You can see it started down here and went straight up like that. So that's another potential group of times to do with the trend trading. So the question now is to go back and test whether those two groups of trades, the ones around 4 o'clock and then the other ones around 9 o'clock, produce better trends. And so we're using the visual method of saying, hey, in the past, when were these great trends started? That one was 1400 hours. Let's see if we can, can't really go back too much. So what we're saying is there's potentially better times to have traded this strategy. And I'm just having a look here. If we move trading forward on the reversal basis, most likely that would have given a better result. That wouldn't have given, but in the end it would have. So maybe if we went 2 hours earlier, so started trading reversals 2 hours earlier, that would have definitely given a good reversal. That one would have reversals I'm talking about, and over here if it was 2 hours, no, that would have still failed over there. So you start playing around with what you see on the chart. If it was 2 hours later, would we have been, no, they would have caught a trend. If it was earlier, they would have caught a trend down. If it was later, still would have caught a trend down. So you start playing around with the time of day concept, and you say, oh, you know, if we moved this 1 hour earlier and we traded with a trend, we would have really made a lot of money, because if you move it 1 hour earlier, there's a great trend. Move it 1 hour earlier, that's a great trend. Move it 1 hour earlier, that in fact is still a great trend. So you start getting a feel of what went wrong and how you can fix it. So that's the time of day evaluation. The direction, again, possibly it's easier to find with the trend trades than others. There seems to be a reasonable amount of trades. There's only three there, 3 there, 3 there. So again, it's pointing towards that the lot sizing is too high, because it's topping trades out after 4 trades. You wanted to get, for price action to work, you need most probably 4 to 6 trades to really work it. So there's a question about these stop outs. There are too few trades that run into the stop outs. The other thing is that, again, you can see these are more trending. The moving averages are designed to find trending trades. They're fast, they're close to each other, and therefore we're saying maybe the reversal strategy wasn't appropriate over this period. So the comments are almost identical to the previous one. So I'm going to move on to the next one, and we might start going a little bit faster from now. Okay, so here we have the Euro Oz, and I'm just going to make it a little bit bigger, give us a bit of a view. Again, this was an against the trend trade. So it's taking buys against the trend, sells against the trend, and sells against the trend. So, and it has made 3 losses in a row. Now, when you have 3 losses in a row, the solution is actually quite simple. Just reverse the direction of trade. So that's our first inclination would be there. I'll just see. So it's entering. It's very similar to the previous one. It's entering at 1600 hours. It's starting around about 1600 hours, maybe a little bit earlier than that. and it's incurring all of these losses. So first of all, it's a slap in the face thing. Just reverse the direction of trade and you should be successful. But let's again do the same as we did before. Let's have a look at and one thing you need to notice: the moving averages are very different from the previous ones. Remember, the previous ones were very close to each other. These ones are a little bit further away. Therefore, it will only trade in the direction of the trend. Like over that period there, the yellow's going up, the white's going down, so no trades will. So it will be. These settings are more lagging settings, so they will wait a bit longer for both the moving averages to be pointing in the same direction. So there's a question: should these ones be as slack as they are, or should they be tighter, closer together, so that they catch the sensitive trends? Okay, but let's go and have a look at the time of day setting. Also, let's have a look at the negatives. There's 2 negatives there, 3 negatives there, 3 negatives. That points towards lot sizing to being too big. So the note here is to have a look at the lot sizing. It might be too big. Let's see what the lot sizing was. 0.3 lots, so maybe it should be 0.2 lots or even 0.1 lots. Then we're going to do the same exercise as before. We're going to say, when do these fantastic trends happen or start? And there's a nice trend going down there. That was at 1500 hours. So the first big trend started at 1500 hours. There's another great trend that started at 4 o'clock. So there's no consistency yet. There's a nice trend reversal that was at 9 o'clock, so it's jumping all over the show. There's a trend reversal that's around about 4 o'clock, so we're getting more 4s coming in, and there's a trend reversal, and that was around about 11. So this currency, the Aussie Euro, has got a very inconsistent time of day setting. So there's a reversal, that's 22. That's even worse. And that one, I think we haven't done that one, is 2 o'clock. 2 o'clock. All right, there's one. That's at 9. And let's see if we can find anything else that looks interesting. Yeah, that one I think we've taken. There's a big turner. Oops. Just stop that from jumping. I think that's the one we were trying to measure. So that's over there. That's 6 o'clock. All right, so that hasn't really brought any new information in that there seems to be a bit of an inconsistency with the times when these trends are occurring, the turning points, when those turning points are happening. They all over the show. There's no real consistency in this particular in this particular currency. And then what one does is you actually identify this currency as an inconsistent currency, and therefore you need to question, should we actually be trading it? That's the value of these visual chart reviews, is to actually identify currencies that have got long candles or long bars and are inconsistent. So maybe this currency is not the greatest currency to trade, and in fact that might be the overall evaluation for this particular one. Certainly there's no with a trend times that start consistently. The closest I can find here is a time between 4 o'clock and 9 o'clock. No, that's pretty wide, but 4 o'clock to 9 o'clock seems to be a time to look at. So the actions from this review is to, firstly, the lot sizing is too big. We can't consider with a trend trading. The lot sizing too big will solve a lot of areas. We need to investigate the 4 o'clock starting time and the 9 o'clock starting time as alternatives. So this will require further analysis, and how that will happen is in the next couple of trades. Let's see if that confirms that would be a better start. But this currency overall it looks a little bit jagged for trading. Okay, let's move on to the next one. So the next one we have is the CAD itself, and the CAD, I actually like the CAD, but let's see how that one has gone, and we open it up. Okay, so let's have a look at what's happened to the CAD. And firstly, let's see when the trading started. So this started at 1600 hours, 1600 hours, and 1600 hours. So that's when the trading started. It trades with the trend. So when both the moving averages are pointing in the same direction, it trades. So it sells in a downtrend, buys in an uptrend, and buys in an uptrend. Okay, so this one has had a loss, profit, and loss. So overall, it is in fact positive. But let's see how we could improve on the CAD here. And the first thing that I notice here is that one trade allowed the day loss to be reached. And unfortunately, it was facing the right direction, came back, stopped it out, and then went in the same direction. So clearly the lot sizing is way too big. So noting here, lot sizing bad, and should be reduced. Okay, that's immediate obvious answer there. The next thing is, if we moved the trading 2 hours earlier, or even 3 hours earlier, so I'm going to move it there, that would have been a better with the trend start. So that's 3 hours. What happens here? Oh yeah, that would have been better. What happens here? Oh yes, that would have been better. That's the top of the trend. So by moving the time frame 3 hours earlier, possibly we would have got better results. 2 to 3 hours. Again, you see, can you see the value of looking at the charts? You can see these patterns jump out to you. And what we're going to do now is what we did before. Let's see when the trend starts. So we say, okay, that was 1400 hours. That trend was 9, so it's 19 and 14. When did that trend start? That was actually there, 14. So we got 14. There's a small trend that was 4 o'clock. That's too small. That trend over there started at 1500 hours, and that trend over there started at 10 o'clock. Okay. And let's just see if we can find a few more nice trends. That one changed trend round about 1600 hours. And that trend occurred round about, oh, that's a funny time, 2 o'clock. And yeah, that's okay for now. So essentially what is coming out is that we said that if we move the trading 2 hours earlier, we would have got better trades, and that means 2 to 3 hours. So that's from 1600 hours to 1300 hours, which is exactly what the visual evaluation is. It says round about 1400 hours you can get much better trades. So immediately we need to change the settings on this to be earlier at around about 1400 hours. All right, so let's have a look what else. Maybe the moving averages should be a lot tighter to catch the really good trends. So let's have a look at that. We make the 12. So maybe we make that 5. And let's just see what that looks like. close. All right, so you see there's a tighter, so it will get us into the trend much faster and keep us in the trend a lot better. Year two, you see there, it gets us into the trend, it keeps us out of that small little withdrawal, and it gets us into the trend very nicely. So it will get us into the trends a lot faster if we use faster moving averages. So again, there's a comment, faster moving averages, MAs. Okay, so what else can we notice here? Because the CAD and the US are in the same time zone, they peak together when the US market opens. So that is why the 1400-hour time frame is actually very, very important for the CAD. This is a really good currency to trade for proprietary trading. All right, so that was a quick one. What else did we not look at? Direction is fine. Lot sizing is fine. Should be reduced. Targets are day targets. Day targets seem fine if the loss, if the lot sizing is reduced. So that also seems fine. No more to do. We don't need to overanalyze these charts. So let's move on to the next one. So the next one is the pound USD, and here we are. It's the pound USD. Let's open it up and set it up. Okay, so the first thing one notices that this is a against the trend technique. Look at there, they're buying against the trend, buying against the trend, and buying and selling against that trend. And how's that worked out? Not really good. 100. Now that's unfortunately the kind of things that happen when you over optimize your settings. And what we're going to do is we're going to say, all right, how do we fix this mess? So the first thing that comes up is you say, well, clearly we can reverse the settings. So the reversing the settings would not work, because if you buy there, you're going to lose. If you sell there, it's going to go sideways. If you sell there, it goes nowhere, it just goes sideways. So reversing the settings is not going to work. So this strategy is a mess. It's not appropriate to the pound. Let's go and see if we can fix this mess. And as I say, fixing messes is one of the key skills that you need to have as a proprietary trader. Okay, so let's narrow this down. So this is a really losing currency here, and let's see if we can find some fun settings. So let's see when this trading occurred. So it was 1700 hours, 1700 hours, and 17. So 1700 hours is clearly not the time to trade the pound, although the optimization has told us so. So let's go and have a look, do the same thing again. Let's look at when these fantastic trends start, and hopefully they'll start at a good time. Okay, so this is about 4 o'clock in the morning. On this broker, there's another little trend there. That was 1300 hours, small trend. Years one that went up, that was around about 9 o'clock. So far we haven't got any consistency. Then the year's a very strong trend that started at 9 o'clock. 9 o'clock's more or less when the UK market opens. And then let's have a look at that trend that started there, and that was 10 o'clock. So okay, so we've got some more reliability. I'm just going to close that off and just do a few more exercises. That's a nice trend that started at 1500 hours. That one there, that started at 1500 hours, and that one over there started at 1600 hours. Okay, and then there's a change. That's 5 o'clock. So there's very little consistency, but there are two groups of times that jump out here: 9 o'clock and 1500 hours. So there are two groups. So I'm going to note here, check time of day for 1500 hours and 9 o'clock. So that if we move the times to that, that might help. So let's go and have another look. So what we're saying here is, if we move the trading 6 hours forward, like to there, 6 hours forward to there, 6 hours forward, would we catch better trades? So that's 1700, not 6 hours, it looks like 12 hours. Or maybe to simplify it, to 9 o'clock, would we catch better trades? Yeah, that's a 9 o'clock change, that's a 9 o'clock change. That is at the moment not confirmed 9 o'clock yet, but roundabout. And yes, so we're saying, and if you went from 9 o'clock over there, you would have had a confirmed trend going up the hill there. So 9 o'clock seems to be a much better starting point. So that's the one thing. Lot sizing, how many? Three losing trades, 4 losing trades, 3 losing trades. So lot sizing is not too bad, but could be reduced. So the next comment here is reduce lot sizing. And then let's have a look. That was a lot sizing. Lot sizing might have given these a little, reducing lot sizing might have given these a better chance, because they would have stayed open, and all of them went positive over there. All of those went positive over there. All of those went positive over there. So what we're saying is that if we stayed in the deal for longer, then those deals might have gone positive. So what we need to say is that, I'm just going to make a note here, observation, stay in deals longer. So and that's the same as saying have lower lot sizing, because that will keep you in the deal a lot longer. You won't reach your $200 margin or loss figure, and you'll stay in the deal a little bit longer. Okay, so that's the pound. What else? Moving averages seem fine. If we're going to be doing with the trend strategy, again, the approach really is to use very tight moving averages, so that you can get into the trend very quickly. And you see, if on the previous setting was 56, sometimes it can keep you out of the trend for a long time. For instance, there it's going up slightly and it's coming down, so it can most probably get you into the trend a bit late. Like here's a good example where it's actually going down. It only gets you into the trend over there, and see there. But if we tighten this, if we tightened it, it gets you into the trend right in the beginning. Look at right there in the beginning, it gets you into the trend. So tight moving averages get you into trend like there very, very quickly. And that's most probably another change that needs to be made here. Okay, so we've done 1, 2, 3, 4, and we are moving on. What I'm going to do now is I'm going to switch to another video. So the video is getting a little bit long. I am going to switch to another video to complete the rest of the analysis. So please watch out for part 2 of this video.